Yo, what is up, guys? It is your boy V for Valentino coming at you again with another bounce back exclusive. Right now, this particular video is going to be on internal and external liquidity. Okay, now in order to truly understand this video, right, and maximize it, this is not a basic breakdown on what liquidity is. Right, so if you haven't done so, please refer to some of the prior videos on liquidity, and you must also know and understand how to validate structure. So please refer to that video as well in phase two, right, to really be caught up and have a full understanding of everything that we're about to go over today in this particular video. All right, so with that being said, let's go ahead and get right into it. Now, before we show some examples here on the chart, right, I'm going to actually draw you guys an illustration, okay? Now, internal and external liquidity is something that's very important, right? It's how you understand what range to work with, right? A lot of times we have ranges inside of ranges, okay? So if we have the 4 hour making higher highs and higher lows, 4 hour is obviously in an uptrend, right? But let's say we have the 1 hour, right, come here and, right, it makes a valid higher low inside of this 4 hour range. So I'm gonna go ahead and I'm gonna change the color here. All right, and let's say we have a valid 1 hour higher low created inside, right, of that 4 hour range. All right, and then the 4 hour eventually makes a higher high. Okay. Right now, what we currently have here is what is known as a range inside of a range. Right, we have a smaller time frame, higher low inside of a higher time frame range. So the 4 hour range would be from here to here, right? But then we have a 1 hour range, which is from here to here inside of that. Okay. Now, whenever the 4 hour creates that higher high and it takes out the highs, right, as in the wicks, the liquidity on top, right? What the 4 hour is usually going to do is you're going to get a retracement of the entire 4 hour range, right, from here to, here, wherever we start to retrace, right? And I would not take my fib from here to look at that 1 hour range setup, but instead it would be taken from here to here, because now we're anticipating the retracement based upon the entire 4 hour range, right? And what would occur is this 1 hour low will get taken, right? And then we're getting a retracement of here to here. That's about 78.6, 70.2. And then the 4 hour go ahead and it makes that higher high right after taking out that 1 hour higher low. Right now, this 1 hour higher low that's inside of this 4 hour range is what would be known as internal liquidity, because it is liquidity that is inside of a range, right, from here to here. Right, so I hope you guys are following me here. Now I'm going to show another example, and we'll get into the charts. Right, another example would be, again, let's say, now this doesn't matter whatever particular time frame, as long as you have a lower time frame, higher low or lower high point inside of the range of a higher time frame, right, after that higher time frame has made a higher high or higher low, a higher high or lower low, right, you have internal liquidity there. So again, 4 hour, or let's use different time frames this time, right? Let's say, for example, right, the 1 hour is an uptrend. We're making higher highs and higher lows. Let's say this 1 hour doesn't create a higher high yet, right? We don't close the higher high on the 1 hour, but price comes to take out the high, right? Price comes to take out the high. And just before the 1 hour is able to officially close a higher high, what occurs is we have the 15-minute creating a little higher low point that's inside of that range before the 1 hour officially closes above this to make a higher high. Okay, what we have here is a 15-minute higher low point inside of this 1 hour range from here to here. Okay, because the higher low point is inside of that range, that is what is going to be called internal liquidity, right? And once we see price retracing, and once it starts retracing, we are not going to draw our fib from here to here looking at the 15-minute structure setup. Instead, we'd be drawing our fib from here to here looking at the entire 1 hour range setup, right? And that 15-minute higher low, we would expect to get wiped and captured as internal liquidity before they continue price higher, right? And a lot of times this is how I feel the institutions can get, both sides of the board. This could very well look like a 15-minute break of structure, and you're thinking when it comes back here, it should sell. But instead, that was really just a 1 hour retracement, right, to capture this internal liquidity, to then continue the higher time frame trend, which in this case was based upon the 1 hour time frame. Okay. Now that we understand internal liquidity, now internal liquidity is going to be any, right, old, low, or high point that is inside of a range, right, inside of a range. External liquidity is going to be anytime we're trading outside of a range, anytime we are capturing a high or a low trading outside of that range, okay, or anytime there is liquidity outside of that range. So for example, when price came down and did this retracement, this high, right, once we trade past it, we're going outside of the range from here to here, right? So from here to here, right, this would be external liquidity taken, right, that high, okay? Now at the same time, right, go ahead and change this color on this. All right, any red here is going to be a lower time frame, higher low point inside of that higher time frame. Right. Now I want you guys to really stick with me here. So at the same time, this here, even though this low is internal liquidity from the range of here to here, right, because it's liquidity inside of this range, we're trading at external liquidity, going outside of a range if we're measuring the range from here to here, right? So from here to here, this is external, right? But from here to here, it's internal, okay? So I hope this makes sense, right? This up here would be external liquidity, right? And we'd be looking to take that. Now, the name of the game is pretty much liquidity. One thing you're also going to need to understand before we go ahead and take it over to the charts is that imbalance is liquidity, guys, right? Imbalance is liquidity. So it can also be in the form of capturing an imbalance inside of a range, right? Or filling an imbalance that is outside of a range, right? An imbalance that's inside of a range, say, for example, we had imbalance here, that's internal liquidity, right? But say we had an imbalance just above here for our potential target, that is external liquidity, okay? Because this is an imbalance outside of this range. This is an imbalance inside of this range. So like how I was saying, the name of the game is liquidity. What they do, they move price from internal liquidity to external liquidity, right? External liquidity to internal liquidity, right? And so I'm not going to change the color here. I hope you guys get what it is that I mean. I'm just going to draw an example, right? Right. These inside range higher lows, they're going to be based off the lower time frame, guys. Okay, and then we're also gonna have some imbalances here. Okay. Right. So when price takes out this high to make a higher high, we have now swept external liquidity, right? Because we traded outside of the range of from here to here. After external liquidity is taken, right, price is then going to seek for internal liquidity because they understand that, okay, somebody got in on this move up. Retail somewhere, somehow got in on that move up. And so they understand there's people in on that move up. So before they can continue to move price exactly where they want to see price go, they want to bring price down and they want to capture some of this internal liquidity where there's still going to be buyers inside of this market, right? Stops below this low, or where there are sellers that were trapped in here, right? They never got a chance to be sellers because we had this nice push up, right? And we had that slippage in price that created imbalance, right? That's sell side liquidity where sellers never got a chance to be sellers in between those two price points, right? So what they're going to do is they're going to move price down to fill this imbalance, right? Capture liquidity to wipe out buyers that maybe got in on that move up. Now, after internal liquidity is taken, at the same time, they understand, okay, there's some people, some way, somehow that got a lot of times price will give us a little pullback, right? And then it finally captures, right? Now from here to here, this is trading outside of the range, right? From there to there. If we're measuring that range, we're going outside of that. So it's external liquidity from there to there. So they're seeking that because they know there's sellers that got in on this move down, which stops just above here. And then this is the last area of external liquidity from the range of here to here, where they seek that. There may be some imbalance just above as well. It's external liquidity, right? They're seeking that. They're seeking that, right? Once their job is done, taking out external liquidity, the process repeats. After this higher time frame, higher high is created, external liquidity has been swept. Right now, they're going to seek for internal liquidity, right, in the form of these old lows in the form of imbalances that may be inside of this range, right? So now we retrace, captures this internal liquidity, right? Captures that internal liquidity, right? Captures that internal liquidity. All right, it's captured enough internal, now it seeks for external. And then it goes the other way. Right, after internal liquidity is captured, it's going to seek for external liquidity. After external liquidity is captured, it's going to seek for internal liquidity. After internal liquidity is captured, it's going to seek for external liquidity. Right now, it's just a literal pattern of how they're moving price areas they need to achieve, right? Liquidity that needs to be captured. All right, the name of the game is liquidity. So now what we're going to do is I'm going to show you guys some examples here on the chart. Okay, now again, you're going to need to understand what liquidity even is, and you're also going to need to understand how to validate a higher low, or how to validate structure based upon the rules that is given in the prior video. Okay, so here, what we have is the 4 hour making higher high and higher low points. All right, so 4 hour is in a bullish structure. Right, we have 4 hour higher high, higher low, higher high. Now, based upon the rules of validating structure, technically, this is not a valid 4 hour higher low point to me. Okay, now why? All right, again, you need to refer to the rules, but I'll just give a quick refresher. Right, for one, the first qualification is we need 2 bearish candle closes below the last bullish candle before the retracement or the pullback, right? And so if this is the retracement or the pullback, right, we need 2 bearish candle closes below the last bullish one, right? This is the last bullish one before this occurred. We only got 1 bearish candle close below. Right, we also broke another rule, which is making higher high in one time frame. But you guys can again, higher high in one candle, and again, you guys can refer to that video. So this is not a valid 4 hour higher low point. However, it is a valid 1 hour higher low point. Okay, because every time frame has its own structure. Okay, you follow me here, right? So what we have here is a valid 1 hour higher low. Okay. So 4 hour made a higher high here before giving a valid 4 hour retracement. Okay. So the previous 4 hour range is from here to here. That's the previous 4 hour range. All right, we're going to be retracing a new range, right, which is from here to here, right? That's the new range that we're working with based upon the valid 4 hour structure. Right, and so we would want to see a retracement of the entire 4 hour range and not be looking to play this 1 hour range setup here, right? And the reason being is because after the 4 hour came up to capture this external liquidity, and then it made a valid higher high, now what they must do is they must now seek for internal liquidity in the form of old lows and imbalances. Okay, and so if our range is from here to where we start retracing up here, right, the new 4 hour range, we're going to expect the retracement of that entire range, right? And we wouldn't anticipate this setup at all, right? Because if we were to go ahead and mark this lower time frame, in this case 1 hour, right, this lower time frame higher low point, the low of it, the wick, which is the liquidity, we can see that is inside of the prior, right, the previous 4-hour range, which was from here to here. So this one here, sorry about that, right, that one there. Okay, so I'm gonna show that again because I did mark a different higher low there. So this is that 1-hour higher low point. And what I'll do is, because both of these are examples of that, and so what I'll do here is just rewind that so we can, right, so if we mark this, right, we wouldn't have been looking at this based upon the 1 hour, right? We wouldn't have been looking at this 1 hour setup, which is the wick from there to there, right? That's the 1 hour range. Now look at this, right? We have everything we would look for. Last down candle that captures liquidity before the move up, right? We have that institutional candle inside of the imbalance, right? Comes to that area and collapse, right? This is also how I feel that, you know, they can still trade these algorithms, still trade the smart money way, and not have to worry about too many people learning smart money. You know, a lot of times people have asked me like, you know, oh, you guys don't think that if too many people learn institutional trading or smart money, that they'll have to change the algorithms or the way that it works? Absolutely not. Because even if some, you know, Joe Schmo can, you know, figure out what an institutional candle is, or, you know, imbalance or whatever the case may be, it doesn't mean that they truly understand how the algorithms work and the way that order flow is supposed to occur, right? And so, you know, this could be their way of actually, you know, not only messing over retail, but messing over people that are just wanting to learn smart money, right? Because they don't truly understand the algorithms, right? They don't truly understand, you know, the process of things, right? So the reason why this was captured, right, was because this was a lower time frame, higher low, inside of the range of a higher time frame. So we had a 1 hour higher low point inside the range of this 4-hour range after the 4 hour had already created a higher high, right? So the true range to work with was the entire 4 hour from this low to this high where we started to retrace. And what we would have really wanted to see was price come to here. Okay. After it seeked internal liquidity, right, in the form of this low, right, in the form of this low, which again is a lower time frame, higher low, which is inside of a range, and in the form of this imbalance, right, after it sought for enough internal liquidity, right, now it's time to capture external liquidity. So now price, they're going to bring price up to now capture external liquidity because they understand that there's some retail that got in on this move down, right, with their stops above highs, right, they're taking out, and then the process repeats. So notice here, I'm going to continue along just so you guys can see, you know, how the process actually repeats itself over and over and over again, because we do this several times here, right? So notice how after we finally take out this high, right, and we capture external liquidity, right, now what's next? After external liquidity is captured, they must now seek for internal liquidity, okay? So again, this one here is not a valid 4-hour high or low, just like this one, but this one because of a different rule. Okay, the first confirmation is 2 bearish candle closes below the last bullish before, retracement. We got that. But then the second rule is cannot make a higher high in one candle, right? And starting the count from the candle with the lowest wick. So this is the candle with the lowest wick. So this is like 0. And the next one would be 1, right? So just in this one candle, we closed a higher high. So technically for me, based upon my rules of structure, this is not a valid 4-hour higher low point, but it is a valid 1-hour higher low, right? It is a valid 1-hour higher low. Okay. And so someone could be paying so close attention to just one time frame, this 1 hour, right? They see like, oh, okay, bet, like we got this 1 hour here, making higher highs, higher lows, and higher highs. All right, oh, it should retrace here based upon this 1 hour and do another higher low before a higher high. I'm looking right at this institutional candle. Right, that's what someone could be thinking. And so they take their fib from here to here based upon the 1 hour range. All right, they're looking at this last down candle that captured liquidity, went the other way. Right, then I got this institutional candle here. I got this imbalance inside of here. Right, then it gets clapped. Right. To me, reason being, and I wouldn't have even played that, is because if we mark the low, right, if we mark the low of that 1 hour higher low point on the wick, and we go up one time frame to the 4 hour, what we can see is that 1 hour higher low point is inside of the range, right, of this, the previous range of this 4 hour, right, from here to here, right, that previous retracement that occurred before the higher high happened, that is the prior range. So from here to here is the previous range. After the 4 hour made that higher high, right, and took out the external liquidity, now we would anticipate a retracement based upon the entire range, right? And so this here would be internal liquidity, right? This here would also be internal liquidity. So the true range that we should work with and anticipate is from here to here. We should anticipate the entire 4 hour range to retrace. So from there to there, right, we should look for entire 4 hour retracement, and it captures this internal liquidity and it captures this internal liquidity, right? After internal liquidity is captured, what is it now going to seek for? Right? The reason why this process is occurring is because, again, they understand there's some buyers, right? Some buyers managed to get in on this move up, right? Had to. Okay. And there's going to be buyers still in with stops below this low, stops below this low, right? It's going to seek for that internal liquidity. And then on the way down, as it's retracing to seek for that internal liquidity, you have people that are betting on the sell side now with stops above this high, above this high, above this high, right? And so they understand there's sellers that got in on this move down. And so after their objectives are achieved on capturing enough internal liquidity, it's going to bring price back higher, which is their real objective. And then at the same time, taking out the sellers, right, to capture all of this external liquidity here, right? So from the range of here to here, we're trading outside of that, that would be an external liquidity sweep. Okay. It's internal from here to here, right? But it's external from here to here. We have this high as well. From there to there, once we got up there, we're trading outside of that range from there to there. It's external. So it's capped, it's to taking out the retail on the sell side there. But it's internal from here to here. All right, and then the last external liquidity objective here is, of course, taking out the high. Right, and it does that. So again, after internal liquidity is captured, it then is going to seek for external. After external is captured, it is then going to seek for internal. Right, and then just watch this, guys. Watch how the process repeats itself over and over. Okay, so now that we have this move up here that has captured and taken out this external liquidity, the process has to repeat itself. Right, after external liquidity is captured, they have to now seek for internal liquidity. So all the way up until this is captured, it's good to take, you're fine to take 1 hour setups, 15-minute setups, everything like that, right, during this move up. But once the external liquidity is captured and the 4 hour higher high is created, it's really no more of that. All right, we had nice setup in here on the way up during that expansion, right? And if you watched the validating structure video, this will make complete sense. All right, set up in here. All right, 15-minute. Right, during that expansion move on the 4 hour, right, the 1 hour trend and the 15-minute trend is what's going to be taking us higher, right? So while we're inside of that range, we have these setups here that can occur that we can take advantage of, right? Right, but then the moment the 4 hour captures the external liquidity and makes a 4 hour higher high, right, that's done now. Now it must seek for internal liquidity. So what it's then going to do, and we understand that this is the previous retracement before this higher high happened. All right, so that previous retracement is the previous range. All right. So the previous range is from here to here. Right. If we go down on this 1 hour, right, we have the 4 hour range drawn out. We can see on this 1 hour, after all the objectives were achieved, on this 1 hour, what you had here was this, right? And so again, someone could just be learning smart money, right? They're so focused on this 1 hour here, they have no idea what's just happened and how they're pretty much done with their objectives, right? They draw their fib from there to there based upon a 1 hour range, right? They're looking at this last down candle that captures a low, goes the other way, right? They got this institutional candle there, right, inside of this imbalance, right? Everything that they told me to look for, right? Why didn't it work? I noticed that most of my losses would come, right, if you had any for the week, most of them would come from, whenever we had a lower time frame range inside of a higher time frame range. And it's because they've achieved their objective and now they're seeking for internal liquidity. All right, so we go ahead and we mark this 1 hour, right, higher low point. We can already see that it's inside of the range of that prior 4 hour range that we showed. And so we wouldn't be looking for a setup based upon that 1 hour range. But now, since we took external liquidity and made a 4-hour higher high, it must now seek for internal liquidity. So the true range to work with is here based upon this entire looking and anticipating for the entire 4-hour retracement. And so it captures this internal liquidity. It captures this internal liquidity in the form of an imbalance. Right, because imbalance is liquidity as well. It captures this internal liquidity in the form of imbalance. Right, it captures, I'll go one time frame down to show y'all. Right, it captures this internal liquidity in the form of this low, right? Because again, they understand what? They understand there's some buyers, right? They understand there's some buyers that got in on this move up. So before they can really and truly continue their objectives of moving price higher, right, they want to take some of those guys out before continuing the order flow to the upside. Okay, right, this internal liquidity captured in the form of this old low. All right, and then lastly, we had this internal liquidity captured in the form of this old low. And so it literally wiped out all the buyers on that move up from the most part off the board. Captures all this internal liquidity. All right, we also have this in the form of an imbalance. Right, and then retraces based upon the 4-hour range. Comes right to this last bearish candle here that captures this low and goes the other way. Right, came right to there. Right, after seeking all of that internal liquidity. So what happens now after internal liquidity is sought and captured? Well, now they got to go back to the upside and they have to capture external liquidity. Okay, guys? So again, they know there's people that got in on this move down. There's sellers that got in on that. So they got to take them out. Right, they're going to take them out. All right, sellers with stops above here. All right, and sellers with stops above here. All right, so now it's seeking for that external liquidity. Now, since we captured internal, right, after internal is captured, now we're going to seek for external. After external is captured, then it's going to seek for internal. All right, I'm going to show you guys another example here on, another instrument here. I'm going to go ahead and load a new chart. And this, again, very fractal, guys. It's very, very fractal. Right, so what we can take a look at here is this daily time frame, the fractalness of it. So what we can see here is we have a valid, we have the daily in a bullish structure here. We have higher high, higher low. It's also a valid higher low, and then a higher high. This is not a valid daily higher low point. All right, so this is the last valid daily higher low. All right, if we look at this, we can see why this is not a valid daily higher low. First rule is 2 bearish candle closes, right, below the last bullish candle before the retracement. And so if this is that potential retracement or pullback, right, we can see that this is the last bullish candle before it. We only got one close below. So that is not a daily higher low point, but it is a valid 4-hour higher low point, more than likely. Okay, so now this here is that previous daily retracement. Right, we also have this one as well, but that's inside of this one. Now, since both of these are daily, this is not internal liquidity, right? Because these are both daily higher low points. This is not a lower time frame higher low. But the full prior range of the daily is from here, right, to here. Right, I would just take my fib from here though, because this is the most recent daily higher low. But this is the full previous range of that daily. Right. We go down to the 4 hour. Right, what we can see is this 4 hour higher low point is inside of that range. So this is internal liquidity. And so the real true range to work with here was like this. And so what price did was it sought for internal liquidity in the form of this low, because again, they know that there's buyers that got in on this move up. Right. We also sought for internal liquidity in the form of these imbalances. We have this imbalance here and this imbalance here. Right, and so price comes right to that last down candle for the up move. And then we start expanding higher. Right, again, they know there's sellers that got in on this move down here. Right, so what they need to do is they're now going to seek for external liquidity since they just captured enough internal liquidity. Right. From the range of here to here, right, this would be trading outside of that range. So that's external sweep. Okay. All right, from the range of here to here, right, this would be trading outside of that range. So that's external sweep. And so I do think they're going to be potentially seeking for that. Because they need to go ahead and take the sellers off the board that got in on that move down. Right, so now it's seeking for external liquidity. So I'm gonna erase all of this. And right, this is a daily expansion. It's fractal, guys. Right, inside of that daily expansion move, the 1 hour, 4 hours is gonna be looking like this, making higher highs and higher lows. It's gonna be what's walking us up and causing this daily expansion. Right, so we're gonna keep that circled, but then we're gonna go to the 4 hour and we're actually gonna see it in play. Right, so we can see, right, the 4 hour it has an entire trend going on just inside of that one leg on the daily. And it's also doing the same thing of trading from internal liquidity sweep to external liquidity sweep, internal liquidity sweep to external liquidity sweep. All right, so we're going to go ahead and I'm going to show that here. Okay. So we have a valid 4 hour higher low point, right? Higher high, higher low. Then, right, 4 hour takes this external liquidity and makes a higher high, right? Because from measuring the range of here to here, this is trading outside of that range. That's an external liquidity sweep. Okay. Captures external liquidity, right? And at the same time, fills an imbalance that is also outside of the range, which would also count as external liquidity to me. Right? Notice this imbalance outside of this range. And then lastly, also captures this external liquidity. All right, captures that external liquidity. Right. Right, so now that enough external liquidity has been captured in the form of this high, this imbalance, and this high, right? All liquidity that is outside of this prior 4-hour range, right? Now what it must seek for is what? Internal liquidity. Okay, internal liquidity is what it's now must seek for, because it understands that there's some buyers that got in on this move up, right? When we circle this 4-hour expansion, what we're going to see on the 1 hour and the 15-minute is what? Right? It's this, just like we see on this 4-hour after circling that daily expansion. Right? It's fractal, guys. It's really fractal. So when we go on the one hour here, we can see it's walking us up, right? So I'm going to erase that for now. So, you know, someone again could have been paying so close attention to the 1 hour, they're just focused on one time frame. Right? That's why looking at multiple time frames is important, but they're just focused on that one time frame. They measure their fib from there to there. They see this last bearish candle before this push up. Right? You have that institutional candle, right, with this imbalance. Right? Oh, everything they tell me to look for, right? Everything they tell me to look for. I'm gonna just hide that for now, right? Gets clapped. Right? And to me, it's because since we took out this external liquidity and this external liquidity, now it had to seek for internal liquidity. Right? If we go ahead, right, if we go ahead and we mark the previous 4-hour range, right, we can see that this is the previous 4-hour retracement, right? And so the previous 4-hour range is from this high to this low, right? And it's on the wicks, guys. Just to clarify, it is on the wicks. If we go on the 1 hour and we mark that 1 hour higher low point that we saw on the wick, we can see that it's inside of the range of that 4-hour range that we just marked. So we have a lower time frame higher low inside of a higher time frame previous range. So this is now internal liquidity. And so the true range to anticipate the retracement now is based upon the entire 4-hour range and not based upon the 1 hour range. So we would draw our fib like this based upon the 4-hour, anticipating the entire 4-hour retracement instead of based upon the 1 hour. Okay, so now it starts to make sense. Right? Captures this internal liquidity in the form of this low. Right? Captures this internal liquidity in the form of this imbalance. Right? This internal liquidity in the form of this imbalance. Right? This internal liquidity in the form of this low. And then we trade right into that last bearish candle. Captures a low and goes the other way. Trades right into there. Right. Because now that it's captured all this internal liquidity, now what it must do is what? Reason it sought for that internal liquidity is because what? Again, it understands there's buyers that got in on this move up. And so they're like, okay, since our objective is higher prices, right, we got to go ahead and take out some of those buyers before we want to move price higher. Right. Now, once it did that, during this move down, it understands there's some sellers that got in on that move down. So now they're like, okay, now we're going to wipe the sellers off the board who think that this is really a sell, right? And then they start seeking for that liquidity. Notice how after we capture these points, we get a little pullback. Right? You can kind of refer to the earlier part of the video. You'll see what I'm referring to. Right? I'll clear some of this off here. Okay. All right. From the range of here to here, we're trading outside of that. So that's external liquidity that they're seeking for. So it makes sense for them going there, right? But from the range of here to here, it's internal, it's inside of a range. And so this is also an internal liquidity sweep from the perspective of another range, right? And so when that gets captured, we get a little pullback, right? Anytime internal liquidity swept, we get a little pullback, right? After this is captured, we get a little pullback, okay? All right, but from the range, right, this from here to here, the perspective of that range, once we do that, that's an external liquidity sweep at the same time. So they're seeking to take out those sellers, right? But again, from here to here, the range of that perspective, or the perspective of that range, it's internal. So that's why after we capture it, we got a little pullback, okay? And then the last external sweep, right, is these and these, right? It's now looking to seek for those ultimately the highs to take the full external liquidity, right? If we check out this 4 hour, right? All right, notice after it captures this high, move this over, captures this high, and we capture that external liquidity. Notice how it literally just, it makes these equal highs, right? It just falls short of that because it's now already captured enough external liquidity. It just falls short of these, right, making equal highs to set up some more external liquidity for later, right? Because now that it's captured this external, it needs to seek for internal. So price literally just moves from internal liquidity capture to external liquidity capture, right? And so it's setting up for the next external liquidity, right? But before they can continue price higher and they make that move to capture that, right? They know that there's buyers that got in on this. So they're like, okay, we got to take those buyers out, right? Before we can continue price higher. Right? During this 4 hour expansion move, on the 1 hour, 15 minute, we're going to see price doing this. And they know retail is putting their stops below those low points, right? So let's go ahead and check it out. All right, we can see that our 1 hour and our 15 minute is what's actually walking price for us inside of that, right? Creating structure for us inside of just that 4 hour expansion. Right, but after, objectives have been achieved, they got to seek for that. They got to take out those buyers. Okay, so on that last move, all right, again, someone could be paying so close attention to just the 1 hour, right? They see this, and that's what they're looking at. They're like, I got this institutional candle that captured this low here, right? Everything like that, right? It gets clapped, right? Right. It makes sense though, because if we mark the low of this 1 hour, I'm actually going to make this blue this time. So this will be the last example. We mark the one of that low hour, the low of that 1 hour. And then we go to the 4 hour. We can see that this is the previous 4 hour retracement. So the previous 4 hour range is from here to here. Right, and we can see that all of those lows are inside of this previous range. So after the 4 hour captures the high external liquidity here and then makes a higher high, it now must do a retracement based upon the entire 4 hour range. And so how we were really supposed to be drawing our fib is like this, anticipating for it to capture the internal liquidity to take out the buyers that got in on this move up. Okay, it captures them here, internal here, internal liquidity sweep here in the form of a low, internal liquidity sweep here in the form of a low, captures this liquidity here in the form of an imbalance, and then price comes right into this candle here. See that on 15-minute there. Comes right into that candle there. Now that it's captured internal liquidity, what is it going to do? It's now going to seek for external liquidity. We can see that this is the play here because it literally set up external liquidity before the sell-off to induce sellers to get in on this move down, right? And so they know sellers got in on this move down because they set it up so that it would look good for them to get in on that move down. Well, now that's just going to be used as the external liquidity, which is what they're going to seek after capturing all this internal liquidity. So they capture these highs, right? And then the process will then repeat itself as price gives permission for it to do so, right? So this is the video on internal and external liquidity. I hope you guys got some major value out of this, right? It's your boy V for Valentino. Make sure you guys have been taking notes. Right? Make sure you can rewatch the video as many times as you need to so that you can truly understand this, because once you do, man, it just makes so much sense. Okay, so this is your boy V for Valentino. You should be trading, and if you're trading, then you should be a chairman sniper. Let's get it.